Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really glad to have with me for the first time Bill Sheriff. He's the executive chairman of Golden Predator Mining Corp., and that's a company that trades in Canada under the symbol GPY. Today, selling at about $1.45 in Canadian money, and you can buy it in the United States, as I have, under the symbol NTGSF, selling at about $1.10 this day. It's giving it a market cap of around $100 million in U.S. money, so it's not nearly as small as some of the companies we talk about on this show, but it is still small compared to where I think it might be heading, which is why I continue to own the stock myself and why I continue to recommend it to my subscribers, Jay Taylor's Gold, Energy, and Tech Stocks. Bill is an entrepreneur, a visionary with over 30 years' experience in the minerals industry and the securities industry, and he was a founder and previous chairman, chief executive officer of Golden Predator Corp., which some of you may remember. Prior to founding Golden Predator, he was a pioneer in the uranium sector as well, and he is a geologist with a real scientist, but also an entrepreneur. And this is a story really that's quite well known to my subscribers, and one that I'm glad to talk about because I recommended it at 13 cents about a year ago, actually on my birthday on March 25th, 2016. So 1 year later, it's worth $1.10. So thank you very much, Bill, and thanks for joining me today.
Well, thanks, Jay, and thanks to you and your subscribers for being early on the story. I think what we've got here is one of the premier exploration stories in the world, and certainly within North America.
Well, it certainly is exciting. If you like high grade, you've got high grade, and you've got, it seems, lots of it, although you haven't quantified that yet. Talk to us a little bit about, maybe give our listeners a little sense of the history of this project, and called the Three Aces Project in the Yukon, and a little bit about what you're planning to do with it and when we might start to get a sense of the economics or the potential economics of the project.
Sure, I'll be glad to address that. First off, the property has grown from 200 square kilometers, which is huge, to now 350 square kilometers, in excess of the size of New York City, for sure. And we now have taken the property over and done a tremendous amount of work. We first got the property in 2014 from a predecessor company, Northern Tiger. They had done the initial work on it between 2009 and 2012 before running out of money, which many of us companies did during the mining depression there, the 2011, 12, 13, 14. Basically, we were able to merge with them at that point, came in. They had done some bulk sampling, that is taking 3 1-ton samples of various grade material from the 2 veins that were known on the property. Even though it's such a big property, there were only 2 veins that were known or exposed. There were certainly suggestions of many more because they had done a very, very good soil geochem study on 25-meter centers, covering probably the better part of 100 square kilometers. Within that, they identified an 11 square kilometer area that we call the central core anomaly, and this is where we've done all of our work to date. And that's where the real excitement is generated. One of the things they did is they had proven that the only gold you get on the property is within quartz veins. That is to say, none of it's disseminated or in limestones or any of that. So it's quite simple in terms of geology. If you don't have quartz veins, you don't have gold. So we've got 2 other rock types. One's black, one's brown. So it stands out visually as well as chemically. What we did was realize that even though the property is accessible by a year-round road, a highway actually in the Yukon, the Canton Road, the property lies on the other side of a 100-foot wide raging river. So all the work done prior to us was done with helicopters, which meant 2 things: high cost, and you were limited to small equipment, and also limited to just working in the sun. And so these things were impediments to the development of the property. And so what we set out to do was build a bridge. And it's a pretty bold move for your first exploration stuff, really. But based on what we'd seen there and the amount of gold in the veins, multiple ounce per ton in the veins that were outcropping, it was the only sensible move. So we brought in at that time Rob McEwen, Al Freeberg, Patty Capo. We raised $4 million, about almost $1 million of it went to building the bridge and providing good access roads. That was completed in the first week of September 2016, and we have been, from that time until October 25th, so just literally 7 weeks, we put in 10 kilometers of roads and almost as many kilometers of trenches. All digging in and down and trying to explore that central core anomaly of 11 square kilometers of soil geochem. We made it through about half of it. So we got the other half remaining to look at this year, but we had tremendous success in our efforts, having outlined 28 additional veins. And when we say veins, we mean veins of a meter or more in width. We have one as wide as 10 meters. Typically, they're 2 or 3. But a 1 meter wide vein is simply wide enough to consider mining if you have the right grade. Of course, we're nowhere near determining anything's economics or grade suitable for mining yet, but just to illustrate, we only count the veins that are a meter in width or more.
Sure.
So our program developed 28 of those, plus the 2 that were already known. So we had 30 targets going into a late drill program. Once the snow blanketed the ground and we couldn't see any longer for trenching, we turned to drilling. And we drilled between October 25th and December 14th, 54 holes, 52 of which got to target depth. All of those results have been announced now. They were drilled in 5 different areas on the property, the spades, the hearts, and the clubs, 3 different targets at the clubs. Had very, very good success at the spade zone, had better success at the heart zone, and we had some encouragement, to be sure, at one of the club zones where we intersected very high-grade gold, 40, 50 grams per ton, although over narrower intervals, and we think we're very high on that target. So, for a first-pass drilling program, I think the results were stunning, and our predecessors have drilled a bit here and there, but we're going in with a very large diameter drilling because the gold is so coarse and so nuggety that you have a sampling problem. And without getting into too much detail, if you don't drill a big enough hole, if you don't take a big enough sample, if you don't take thorough enough sampling means you're not going to get a reliable gold mine. And to that end, we spend probably 40% of as much on assaying as we do on our drilling, which is a very, very high number indeed.
Right, you've done a bulk sampling too. Do you get the sense that maybe when mining finally takes place, that your actual grades could be higher than what your drill, even your wide core drill, is indicating?
Well, we do. We see that indication based on those 3 1-ton samples that our predecessor had taken, actually. We actually paid to have those processed at SGS Labs, which is an independent company. And they went through and established this protocol for sampling, which is one we utilized, involving 2 kilogram metallic screens on any of our anomalous gold samples. But even they noted that in their actual recovery, once the samples were processed in their entirety, the actual recovery was oftentimes 15-20% greater than that indicated by even the best sampling methods that they used. So, it's only 3 sample spots. So, you can't say that it's definitive across the whole property, but there's certainly indications that whatever sampling technique we use may underestimate the gold.
Bill, I understand you say there's no dissemination between veins, I guess, and so that really means you're really mining the veins, I guess. It's not a prospective large open pit target here then, I guess, right?
Well, with the exception of when you get areas where these veins are close enough together or when they are lying parallel to the ground surface at a very shallow depth. And there are a couple of instances of both of these that we may indeed have some open pit targets. It wouldn't be giant open pits like you see in the copper mining industry or anything like that. There may be some small targets of opportunity, if you will, that become open pits. But the vast majority of the target, the vast majority of the project is going to be focused on high-grade underground veins.
Right, and they're. I mean, for the most part, these all come up to surface, right? These are surface targets for the most part to start with. So it's not as if you're going to have to spend a lot of money getting to some great depth to start accessing the ore.
Well, here's something to start on. These are called orogenic veins, and these do come very close to the surface, if not at the surface. At least some of them do. Some of them are a lot deeper as well, as we found some buried veins that don't outcrop in our drilling. So there's just going to be a large number of them, that's clear. And there's certainly some to get started on. The orogenic veins typically, and we haven't drilled more than 200 meters on ours yet, but typically these tend to have great persistence with depth. So in terms of the geologic model, we're quite optimistic that we'll see some continuation at depth that you just don't know until you drill the holes. And,
all right, so
quite good about this year.
Okay, maybe you can talk a little bit about your drill program and when we might start to see, or when you might be able to come out with some 43101 resource. Do you have a target date for that or not?
We don't, Jay. It's just so early, and we don't want to pigeonhole it by putting out a premature number on a very small portion of the properties. This project is a district scale potential. I mentioned 350 square kilometers. We're working on right now about 5 square kilometers of that. So, essentially 1.5% of the property. We've got similar geology throughout the entire 45-kilometer length of the property. It's not to say it's all going to be ore. It certainly won't be, but it's favorable for these type of deposits, and we do have anomalous soils and rocks all along the 45-kilometer length of the property. So there's a whole lot of exploration ahead of us. Yeah. And we're going to be doing a bit of that this summer. We'll be doing regional recon, regional soils, developing new targets all throughout the entire property, but the vast majority of the effort, both in terms of manpower and dollars, will be going into advancing this drill program. We'll probably average 3 drill rigs turning this year. We only have one now because it's still winter up there. So 30 below 2 days ago. So
okay. So
not spring yet, but so we'll probably drill. We were budgeted for 20,000 meters, and that was before our recent successful oversubscribed financing, which brought $17 million into the treasury. So we haven't put out an exact number on where we're going with our drill plans, but it'll be significantly in excess of 20,000 meters, given that budget and given the fact that we have more targets than we have money to drill even now. So I think you'll see rapid advancement along the drilling. I would look for news releases every 4 to 6 weeks in terms of drill results. And of course, those are variable factor in terms of timing because of the transportation and then the samples to the lab. Here again, we have a very extensive sampling protocol that takes extra time. So we're looking at generally a 4 to 6 week turnaround, and we'll get those out, as soon as we can process them. But it should be steady news flow because we'll be drilling from now up until and through the middle of December, and then we'll take another month or a month and a half long break and start again in February 18th. To address your question about a resource, we're going to take this a little differently. We're going to actually be, I believe, the first company go with total transparency, and that is we will actually have a downloadable file. It's not there yet, but we're looking to have it implemented by the end of the second quarter. Downloadable file that anyone that wants to can come and download all of our data and plop it in their own program and do their own modeling. Now, that won't have much effect to your retail investors, but what it does do is it provides the utmost in transparency, and it allows all of the analysts and many of the mining companies and a lot of the independent analysis to actually see what we see without most companies just release what they want you to see. So by virtue of this, they'll be able to see everything, and the good, the bad, and the ugly, and be able to make up their own minds in terms of where the resource is going. We've chosen this approach just primarily because we've got so much to drill. And we don't want to actually stop and take the 4 to 6 months that it might take to get a resource estimate out on a small portion of the property when we'd much rather make progress boldly moving forward on more targets.
Wow. Well, that's an excellent idea, actually, because the professionals, the geos, the guys that are able to go in there and start to picture it and calculate resources on their own will start to factor that into their own recommendations and purchases, I suppose, and should help retail investors secondarily, I would think. I'm really happy to hear you say that. I wasn't aware that you were planning to do that. Just maybe one message, a word or two, Bill, about your infrastructure is pretty strong up there. You have good access, I believe. What about energy costs and some of those issues that we oftentimes think about in regions, more secluded regions?
Well, energy costs, our grandchildren will not see this area go on grid power. We can drive to it, 365 days a year. But there is not going to be a, electric pole driven down that road in our grandchildren's lifetime, probably. That being said, not too worried about it. High grade takes care of a lot of things, and of course, a lot of your high. So your alternative, of course, would be to be looking at either diesel gen sets or some sort of liquefied LNG, liquefied natural gas, big enough to have its own infrastructure. All of these things cost 2 to 3 times what grid power does, but when you have the healthy grades that we have, and you're looking at an underground mine where your usage is not that great, I think you're going to find that it's less of a consideration than in most mining instances.
Right. Well, you certainly do have an awful large target to shoot at, and I mean, as you mentioned, what did you say? 5 square kilometers over 350 or something like that. Of course, so you'll be doing some recon on a larger area later this year, I guess, and we'll look forward to that as well. And of course, I guess the driver then.
We see this just developing. You know, we find new targets each year. We progress those through. The ones we find this year will be progressed next winter, just as the ones we found last year. And it'll be an evolving systematic exploration of the district. And I think you'll see a lot more pleasant surprises than negative. But that's what we see at this point.
Yeah, well, so the driver for the share price is going to be continuous flow of drill results, and well, so far it's been very, very exciting, no doubt about it. Well, you have one other project, an advanced stage project that certainly has to be worth something to your company, and that's the Brewery Creek mine. Could you just take 30 seconds or a minute to talk about that and what your plans are for that?
Be glad to, Jay. The Brewery Creek mine was the world's first subarctic heap leach open pit mine. It was run by Viceroy from 1996 to 2002. At which time it was put on hiatus due to low gold prices, a hedge running out, and depleting reserves. We came in 2009 and picked that up and ran it from about 100,000 ounces of oxide resource up to the current 43-101, which if you include the indicated and inferred, is north of 800,000 ounces at just a little over a gram per ton, which for first world countries is a pretty good grade for oxide leachable gold. The property does still have some of its operational permits in terms of the water license. It would need to go through re-permitting, though, which is about a 2-year process in order to attain production again. It would be a relatively modest capex from what previous studies were done. There was a PEA done in 2014 that's on the website. But as these things go, it's on the lesser expensive side. So we think it offers a lot of opportunity to a mid-sized company to come in and maybe drill for a year, get the resource up over 1 million ounces. We were hitting 70 or 80% of our exploration holes when we shut down due to lack of funds in 2012. So we know there's more there. We just don't know how much. And in fact, in some metallurgical testing earlier this year, we got the best grade that we've seen on the property just doing some metallurgical testing. So there's still some life in the project for sure, and I think you'll see it return to production over the course of the next few years. We aren't miners, and to that end, we hope to joint venture it with a proven company that has production capabilities. Mm-hmm. It's clearly not big enough for Newmont and Barrick, but there's a whole host of small and intermediate-sized producers that would fit nicely in their portfolio.
Sure.
Those are the people that we have begun discussions with, and hopefully we'll find a home for it.
Yeah.
And we would keep a retained interest and let them run the project.
Okay. A retained interest of some kind of joint venture, or at least an NSR, I suppose, right?
I think we'd prefer to have an actual participating interest but carried to production.
Sure. Excellent. Well, it's really an exciting story, Bill. I want to thank you for taking the time to share this with our listeners. Anything else you might want to add before we conclude our discussion today?
No, I think we summed it all up. It's just going to be drilling, advancing things, as well as new discoveries in terms of trenching and mapping and geochemical, and all those aren't quite as exciting. They'll lead to more drilling next year and even more. So it's just a very compelling building story, and all of us are quite excited about it.
Very good. Well, we'll be certainly keeping an eye on it. I will be, because I own shares. It's of interest to me and my subscribers, and hopefully some of our listeners here as well. Well, thank you very much again, Bill, for being with us.